Yes, we come at Demo Consult, bringing you one of our tax experts, CTA, CPA, Deed and Mutatinency, again sharing with you about taxation matters in Uganda. We have promised we shall do this, and today we are discussing common mistakes that we normally do while filing tax returns. I want us to share, and we appreciate some of these because we are in a season of actually filing our income tax returns. We file VAT returns every other month. So let's appreciate some of these mistakes that we actually do. Now, one of the mistakes that we do is filing income tax returns with a turnover that is different from what we filed in VAT, that is different from what is within withholding tax. You find you have 3 returns that are with URA or 3 reports that are submitted to the taxman, but with different figures. What do you expect? That is a big blunder. And I will tell you, there are many more others. You find you are declaring loans, but these loans do not have interest. Which loans are these? That is another blunder. We have also seen, you find someone is filing a nil return as income tax return or no return, yet this person had actually filed a provisional return. Do you think that one is right? Do you think it is sustainable? There are many other mistakes that we do. We have seen someone claiming employee expenses that are much higher than what was declared in the pay-as-you-earn system. That is a blunder. It can be avoided. We have also seen people claiming for expenses that actually do not rhyme with what the business is doing. You are into services like the way Demo Consult is doing tax advisory services, but you find I'm claiming expenses to deal with manufacturing expenses. Really? That is a blunder, and it can be avoided. We have also seen people not filing returns on time. You find you have sales, but you have declared them in IFMIS, but at the end of it all, you are not filing your VAT tax return. Some of these things can be avoided. We have also seen people claiming expenses to deal with class 2 of assets. Class 2 of assets is for a few people who are in manufacturing, who are in farming and mining. So if you are in a business that is not listed amongst the 3, do not claim wear and tear related to class 2. We have also seen other people claiming for wear and tear when they have not declared their assets in the balance sheet. Where do you get these assets from to put in the wear and tear schedule? We have also seen people who are not putting the balance sheet. That is a mistake. You have figures from the income statement that will go into the balance sheet, but there is no balance sheet. We have also seen people who are having differences in closing stock. You are having closing stock in 2024, but you are not carrying it as opening stock in 2025. That is a blunder. Now, how do you come out of this? 1, you are given, for example, 6 months upon which you should prepare and put everything in order so that you file an accurate return. What do you need to do? 1, ensure you have the right people to do this work. Ensure you have done reconciliation. What am I saying? Get your bank statement and ensure that all the money that you received, you can account for it. Look at your withholding tax account. Look at the credits. Reconcile them with VAT returns. Reconcile them with your annual turnover, so that by the time you file to the taxman, you have actually filed an accurate return. Also, ensure that all loans are supported. As they have agreements and interest has been charged and declared in the income statement. Also, ensure that all your staff have been declared so that the employment expenses are part of your pay-as-you-earn system. Ensure that, for example, NSSF 10% must be a 10% of the gross income that has been declared in the pay-as-you-earn. Most of these mistakes can be avoided. We can engage one another. We can plan together. We can move this journey so that by the time you file your returns, they are actually proper and accurate returns, and you can avoid business disruption from URA. Thank you.